Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. So let's first look at the structure of the webinar, how it's going to happen. The first part will be the previous questions that we received from our team. As we can see here, the previous webinar questions, we're going to go through them and try our best to answer. The second part is dynamic questions, which is the true purpose of this webinar, to give you guys the ability to ask whatever you want regarding trading and to get the answer on the screen, which I'm going to jot down just here. Going to paste it from the to copy that from the question section and paste it down here. And similarly, we're going to go through them and try to answer them in the best way. The third part is more informative. The third slide here is just to save you the trouble to find those things on the website. Although we've improved the interface, I'm going to show you that you can get to some of the links directly from here. You don't even need to leave the screen. Okay. Now, let's leave this last slide is just to assist us to emphasize the approach for analysis, technical and fundamental analysis. I do have a feeling that we're going to cover analysis through the questions, but if we're not and we have spare time, we're going to use it to, like I said, to understand analysis a bit better, but nothing too crazy. Okay, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Okay, now a very common question is if you can recap the webinar, if you can receive a recording of the webinar. I understand that sometimes we don't understand everything on the first time and we need to recap. And if I go too fast, you would like to watch it in your own pace, and that's great. And I'm happy to let you know, guys, that the webinar is recorded and you can see the recording very easily later on our channel on YouTube. And not only this webinar is recording, but the rest of the webinars that we are making. In other words, what I'm telling you guys is that there is a huge library of previous webinars which you can just watch freely and educate yourself in different subjects, from analysis to basics and much more. Everything can be found on our channel on YouTube. Regardless the subject that I'm teaching, regardless what I'm showing on the screen, if there is if you popped up with a question, you can just jot it down and I will, like I said, paste it down here. Okay, anything you want related to trading or AvaTrade. All right, the first question is how to use AvaProtect. AvaProtect is one of the tools that we can find on the WebTrader. Okay, for the people who are not familiar with this interface, this is the interface that you can reach through logging in with your email and password to our website, okay, to avatrade.com. It's called the WebTrader. You don't have to download or install anything. Really, you're supposed to be here right away. Even if you're in a different part of the WebTrader and you would like to go back to the default screen. Okay, so let's suppose you are in here on the calendar. Okay, and you want to go back. You can do it in two ways. One is to go to trade. The other one is to click here on the AvaTrade, which I'm going to show you in a second example. Let's suppose that we are here. Okay, and we wish to go back to the original, to the default interface. So basically I can click here AvaTrade and I'm back very easily. All right, and I was about to say that AvaProtect is among the tools that can be found on our WebTrader and cannot be found with MT4, MT5. And it also can be found on the app. It also can be found on the app. Let's get ourselves somewhere for the notes, just to be a bit more organized. Okay, so we said that this is the WebTrader or the trading app. Both lets you use AvaProtect, and it's super simple. Let me just click here buy as an example, and then we can see that AvaProtect here is if I point on the eye, I have a bubble with information that I can read about it. But you got me now, so you don't have to read about it. I'm going to type a description in my own words for us to understand. What happens when I click here on the box? We see that there is a time length opened here, and I can extend from 1 hour up to 2 days. Now let's understand what it does. Okay, so I wrote down the name of the instruments we see here, and we see AvaProtect. And what this tool lets you do is very simple. You can protect the position for a certain time frame. Whatever you lost during that coverage, you will get back. And when using the service, there is a fee, there is fee when using the service. In other words, the number that we see here to the right, as soon as I click here on the box, please watch that when the box is unselected, the fee doesn't appear, and that means that I don't have to pay the fee. If I mark the box here, or alternatively, I click here on the golden shield, we see that there is a number popped here, which represents the fee. And now, watch what happens with the fee when I extend my coverage. Let's go through that again. So that tools allows me to cover the position, to protect the position, and whatever I lost during that coverage. So if I with a buy, if it goes against me, it goes down against me. Whatever I lost during the coverage, I will get back. Now, regarding the fee, okay, I want you guys to notice what changes the fee to be bigger or smaller, and that has a significant impact on the efficiency of how I'm using the product. Okay, because in a scenario that let's keep it this way, let's keep it exactly this way, okay, and understand why in this scenario I'm not using the tool efficiently. Can somebody from the audience write in the question section if you guys understand what I'm explaining? Okay, you can already see here that the fee is $29.76, and the possible profit that I can gain from the take profit that I have here is actually $27. So if I'm going to go like this and I'm going to take the position as it is now, what will happen is I will make less than the fee. And we don't really want that. The whole point for this product is to let you protect the position. So if you lost a much bigger amount, you can get it back. So let's decrease that. Okay. And let's extend that. Okay, and now we see a much, again, regardless if this is far-fetched or this is something that can happen or not in the time frame represented here, but just to understand a bit better how to utilize this product a bit more efficiently. So when we see that I increase the take profit, when I increase the value here, and we see that the possible profit is increased from the 27 that we had to 221, which makes much more sense than the fee represented in here. And that means that if I'm using the product now with the numbers that I have at the moment, and I'm gonna gain the number that is here versus the fee, again, if I want to extend it, I'm gonna show you now an example what will happen if I want more than an hour. Okay, but currently with the numbers that we have, we can potentially pay a fee of 29, make 221 and 27 cents and lose the same amount. Okay, but if I increase it to match, currently we're looking at daily candles, and the coverage here is for 1 hour, right? So basically the value that I'm looking for in my take profit, let's mark it in green, versus the value represented in a take and stop loss, let's paint it in red. Okay, and then we can see that in daily candles, I can think perhaps it can move there within a day or two, right? But not within an hour. Again, this is my own quick analysis to the situation we're having here. So if I wish to expand my coverage, watch what happens with the fee, right? Let's expand 3 hours. Now it's a bit higher, all the way to 2 days. Okay. In this scenario, if I'm covered for 2 days, we can see now that the fee that we're paying is no longer 29, but it's 98. It's still better for me in terms of numbers, because if I'll lose $221, okay, by paying this 98, I'm very happy with that. Very happy with it, because without the service, if I lose this much, this is how much will be deducted from my account. Okay? And with the product, what will happen is this will be deducted and this will be deducted, but the 221 will be back as a plus. Let me show it to you in just a second, quickly here. Okay. This is what you're gonna see if you close the position after the coverage. Just a second. Okay, so if we quickly do the math here, let's look at the loss scenario. Okay, perhaps we'll begin with the profit first because it's easier to understand. In this scenario here, super simple. What I'm gonna see on when I will review in the history, what I will see is that I've made 200. This is if it's been triggered by the take profit, right? If it gets to the take profit, I'll make 221, and the fee, which I'm gonna pay regardless. Doesn't matter if I make money or lose, the fee will be paid anyway. And this is why it's important to understand what I showed you now and make this comparison before opening the position. So you won't end up taking a position paying $98 and, God forbid, make only 50 or 60 or less than the amount that you paid. And now with the last scenario, okay, what will happen is okay, as we can see here, this is again super simple to understand. Potentially, if it triggered by the stop loss, I lose $221.27. I will also pay the fee here, as we see, but I'll gain back the $221. Okay, remember that this is only for the duration of our coverage. And if I choose in my liberty to hold a position for another 3 or 4 a week, okay, after the 2 days, I will only receive the partial amount in the beginning, which was covered. Okay, not what will happen later on. What will happen later on is not covered. And I'll tell you something is in addition, I may not extend my coverage. So I must pay attention when I design the position to when it will expire and act accordingly. Okay, we cannot extend. If we had 1 day and after this day, the expiry, we say, hey, let's have another day. There is no way to add another day. Okay, We have to do it in advance. We need to design the position in advance, and this is how we can monitor it more efficiently. All right, this is really, I think, a simple way to understand the product. Of course, you guys can play with it much more and choose different variations for the fee. Oh, one more thing to remember, one more thing to know. The time length is not the only factor that increases the fee. Okay, if I will adjust the size of my position, let's take it to the bare minimum. As you can see, if it's in the bare minimum and I'm paying $3.28, okay, just a second, let's adjust. Okay, the possible profit and the possible loss is decreased accordingly. Okay, so with the load size, and with the time length, we have control on the fee. So for instance, if I will increase it again to 0.1, we see the fee is increased. If it's one lot, so it increased a little bit more, but accordingly, so our take profit and stop loss. Okay, guys, before I'm moving on, do we have any questions about what we went through? Any questions about AvaProtect, the tools or the product? We have a question from Mitchell. Does this apply to all instruments? Oh, thank you, Mitchell. This is not for all instruments. Let me just jot it down as well for us to know which instruments we can use AvaProtect with, and that's Forex, gold, and silver. Forex, gold, and silver, and not all the instruments. So this is too important to remember. And again, it can be found on the web trader or the trading app, and not the MT4, MT5. Okay, I think we covered what we needed in regards to AvaProtect, and you guys can, like I say, take it a further step and embed it in your strategy if you want to. I think we'll just take that one and just put it down here. Okay, let's also reduce the, okay, that looks much better. The second question is how to simulate potential profit or loss. Okay, well, we've already done that. But let's diverse and take another asset, another instrument from the list, perhaps one of the indices. All right, let's go with FTSE maybe. Okay, and let's paste the, okay, we've got the question. So how does that works in terms of simulating the take profit, the profit or loss, potential profit or loss? Okay, so again, for this demonstration, let's take it to the bare minimum. Bare minimum for FTSE, because the lot size is 10. If we take 0.1, it will stand for one index. And then we can quickly increase the value. Again, this could be really anything else that you guys want, but I'm using round numbers just to, again, get the point across. Let's see what else we need. Let's also bet on the price for this entry. And let's, Don't worry, guys. I know that I'm doing things a little briefly, but again, I'm going to explain everything that I'm doing here. Let's. On my account is in dollars, so the numbers here are going to be presented in different currencies. Well, in dollars, but after the conversion rate. So I'd rather take something that makes that we can calculate easily. Okay, so again, we took NASDAQ instead. Again, let's increase that and decrease that. But we would like to have a flat number. And also as our entry. All right. Okay, so we've set up NASDAQ for our example. Just a second. And we can see that, with one unit, I'm just jotting down the numbers in here to later on paste it in our presentation. Entry point 20,800. Okay. Take profit, don't worry, I'm also going to explain about the take profit and the stop loss in just a minute. But we would like to, okay, great. So what we have here is very, very simple. Let's keep it this way for now. Actually, yeah, let's keep it like this for now. All right. So as you can see, the value for NASDAQ now is 20,793.5, and it will keep on moving, but this will not have an impact on our calculations because I found the price for an entry with execute when price hits. So they are immediate orders which I can launch the position like this right away. I can launch and buy in market price, okay, or I can sell it again in market price, which with an immediate execution, or I can place a pending order such as this, execute when price hits, which is correlated in MT4 and MT5 to a pending sell or a pending buy, and this is a pending order. Okay, so that means that as soon as it will reach the price that I've mentioned, let's just quickly also place it on the chart just for us to have it. Okay, so the current price, we don't really need that because we see that it's already there. But for the take profit, we would like to paint it in green, and then that one will paint it in red. Okay, and now I can very easily simulate the potential profit or loss by modifying the take profit and the stop loss. Okay, so let's go through the scenarios. The entry that I set here is 20,800. The take profit that I set here is $100 higher. Stop loss that I set here is $100 lower. And that makes perfect sense because we have only one indice. Now, if instead of one indice we would have had 10 as an example, then this $100 difference would project 1,000. Okay, and it will be multiplied by the number presented in here. Okay, so 1 give us 100 because it's $100 difference. 10 gives us 10 times higher, 10 times more. And the next thing that I can do is I can move move the take profit and the stop loss. Okay, as the question asks, how to simulate potential profit or loss. So I'm going to simply write down we can enable the take profit or stop loss in the web trader. The potential profit or loss will be presented to the right. Okay, and while I will expand the take profit, I will take it higher and higher. As I can take it higher and higher, I'm increasing the possible profit, taking it higher like this. And the more the farther away my stop loss is going to be, it will increase my possible loss. Okay, as you can see, can increase, okay, or decrease back. If I want to decrease, I'm just going to click here on the plus, getting it closer to the entry. And as you can see, guys, it's presenting me what can be the possible profit or loss. And this way I can better design a position that suits to my needs. For instance, if I would like to make 1,000 with this position, and let's suppose that I would like to increase the lot size, but not to 10, because with 10, as you can see, the margin impact will not allow me to take this position, because to have 10, I need the 10,400 available margin, which I don't have. I don't even have that with any position open. So of course, if I would like to have it as an addition, I won't be able to. So instead, I would like to increase it instead of 10 to 5. And then we can immediately see that with 5 indices over $100, we can make or lose 500. So what needs to happen now for me to make the 1,000 that I want to is I must increase. And as you can see, every dollar that I increase, it doesn't go up by $1 as previous. It goes up by 5, right? So let's increase. Okay, we could do this. We could do this with the plus. But since we know we need to increase this by 200 instead of 100, I'm simply going to write down here okay. And now because the entry is 20,800 and my take profit is instead of 20,900 is 21,000, then I can make 1,000. And I can do the same thing with the stop loss. If I feel that the position is too exposed and I want to lose less. Again, all I did is just enable the take profit and the stop loss. Okay, they are also pending orders. Take profit will close the position automatically with a profit when reaching the price, and stop loss will stop the position automatically when reaching the price. And as we said, execute when price hits is actually a pending order to launch the position, and it will be based on what's written above. So if it's a buy and it's marked like this, it will open a buy. And if it would have been with a sell, well, then it would launch it with a sell. It seems like our numbers has changed. That's fine. I think we are done with the question. Okay. Okay. Do we have any questions about what we've learned with the simulations? Any questions about what we did till now? How to do it with MT4? All right. Max, you're asking how to do it with MT4. It's an excellent question. So to do it with MT4 or MT5 to simulate the possible profit or loss, you need to multiply your movements by your units. So movements times units equals potential profit or loss. Okay, but if you have another screen, or you can use it just to design the position, you don't have to use it to trade if you don't want to, because the platform is correlated with, it's connected with MT4, MT5, and you can use the web trader to review an MT4 or vice versa. Okay, let's quickly take that and paste that down in here. And yeah. All right, great. So we have that. And the third question, or that one, I think, I also need to. All right, so how to set multiple charts on the web trader. This is, again, super simple. This function can be found here on the toolbar. And if I would like to have multiple charts, all I basically have to do is, you can see this is the fourth. So 1, 2, 3, 4, the layout icon here. And if I'll click it, I can choose which type I would like the charts to be aligned. So let's suppose I want them one next to each other, or I can have them one on top of each other. Just a second, like that. Okay, really it's a matter of flavor, whatever you prefer. Okay, let's suppose that I would like to customize presented instruments in here. Let's suppose I want to keep NASDAQ, but I want in the middle to have Euro Pound. And in here, let's go with, let's keep it Apple for now. Okay, so we have NASDAQ, Euro Pound, and an Apple. And let's suppose that I wish to, okay, but I want to show you, I wanted to show you how to change it, right? So the way that I did it, let's switch this to Tesla. Okay, so as you can see, there is a rectangle here in light blue, just going around the chart. You see that rectangle? Okay, when I click, it changes. Okay, it changes. And it will basically mark the chart, and that means that whatever modifications I'm doing here on the toolbar, it will be based on the chart selected. So if I want to, let's say, add an indicator as an example, okay, so to quickly add an indicator, I can click and drag it to the right, then hit save. As you can see, it's presented on the chart. Okay, same apply with opening a position. So for instance, I would like to open a position for let's say Apple. Okay, the market is closed, but just to show you. Okay, what I did it as first I marked it. Okay, as you can see, it's selected right now. Okay, you see right now it's not selected. We don't have the blue rectangle. So if we click it, we have it. And once we have it, we can click buy or sell. It's also important to know that if you switch to another instrument, let's say we go back to NASDAQ, Apple will stay and the numbers will stay. So you must remember to either close that down, just like that. See, closed the order entry like that, closing it, and then switch to NASDAQ. Okay, so like this, if I click sell or buy, it opens NASDAQ right away. And if I switch back to Apple and I want to trade, I'm still gonna have NASDAQ. But what I can do instead of closing and opening is simply marking it, okay, like this as it's selected. And then I can click save and it will change to the instrument selected on the charts. Apart from that, you can also split the charts to specifically analyze what you want. So let's suppose I have this open, I'm looking at the charts, I have my indicators and everything. And let's suppose I want to specifically look at the Euro pound for a moment. So what I can do is I can click in here like that on the tiny arrow, and it will separate Euro pound. I can still go back though. I still have my charts here and everything, but I have this separatedly, and I can choose to specifically focus on that for the time being if I want to. Same with the other alignment. You see the same way in here. The arrow here. If I would like to focus on Nasdaq as an example, so I click. Let's give it a moment. And we are here. Okay, we have Nasdaq specifically, and we can trade and analyze, and we can always go back, no problem. All right. Other than that, I think splitting the chart has never been this easy. Also, I can split it for more, right? I can even have 4 like this. You guys get the idea. Again, it will work the same way. You see blue rectangle for things that are selected. All right. Okay. So to set multiple charts on the web trader, click on the layout change icon, which is the 4th to the left on the toolbar. And as we saw, we can customize it, we can play with it, we can separate the instruments that we want. Okay. All right, and the last question that we have here, how does diversified strategy works? We have also another question here. I just wanted to find out why sometimes I am unable to see the signals as they are blurred out and I must contact. Yeah, this is an excellent question. It's excellent question. I think that mostly the signal service is offered to anyone freely, so use it while it's free. But I guess that in the near future things can change and it will be limited in access to different account types. So whoever can use it for free, guys, just use it for free. Whoever has limited access, you need to contact your senior account manager and see which account type you need to enjoy the signals. Okay, I hope it makes sense and it helps clarify. All right, let's take that question, paste it down here, and understand how does diversified strategy works. Actually, let's bring back that layout just for the moment. And let's change that to coffee. And keep it like this. Let's keep it like this. Okay, so what is better, to trade one instrument or to diversify? What do you think, guys? Is it better to have one instrument versus many. Well, not necessarily many, but more than one, right? What do you think? Diversification is good or not? Okay, so let's look at the advantage and what we can get from diversification. Okay, to diverse means that I'm going to extend my strategy from using a single instrument. Let's suppose that I'm trading NASDAQ only, or gold only, or it doesn't really matter, but let's suppose that I have NASDAQ only, or let's say NASDAQ, Apple, what we have here, Euro Pound, and coffee, right? Yeah. So we have coffee, okay, and we have either NASDAQ only or NASDAQ, Apple, Pound, and coffee, which is diversification. What do you think, guys? Is it good to have one instrument, or it's better to trade a few? Okay, so let's look at the advantage, the pros and the cons, and understand what it can give, diversification, and what's necessary, what is necessary to use diversification. Okay, when trading one instrument, we need to manage one instrument, and then we can familiarize with one instrument. And once let's give it a moment. And once we have our indicators, and once we have our averages and everything, so we can basically just proceed with our strategy because we are familiar with the asset, okay, and we know what specifically to analyze, and that's great. However, from the nature in trading, we can never know if this position will make money or not. We can think and we can hope. We cannot know if this position will make money or not. So what diversification is giving us is the ability to get to a certain amount instead of with one instrument, but with harmonized diversification. Meaning, if my goal is $1,000 a week, okay, and I say NASDAQ, I'm going to show you guys an example in a moment, right? Okay, so let's suppose that, oh, we have it open, so I'd rather use this. Let's suppose that we have a position just like we had before with okay, it's already gone there automatically. Well, why not? Okay. Okay, yeah, and I see as an example, that with NASDAQ I can make 300 or potentially lose 300, right? And this is one existing position. Okay, but my goal is 1,000, so I can do it this way. Right? Which is one position. And I can go and have another position with Apple. Okay? And with Apple, I can go through a similar process and I can design this time the position to potentially Okay, because just to clarify something here, guys, 10% of 10,000 is 1,000. This is why 200 is 2%. It's a nice technique to use. Okay, so we can have this as a, again, of course, you guys understand, as I said in the disclosure, diversification doesn't have to work like this. You can have 20 instruments and you can divide it in whatever way you want. But I'm showing you here an example on what's presented on the screen. Okay, let's also add the pound in. So we have 300 and 200, which is 500, plus 200, that gives us 700 in total. Okay, and we need another 300, so let's just quickly have that. And our fourth is coffee. Okay, this is a nice example. This is a nice example to diversified strategy. Hey guys, just to get your head around it. The reason that I also mentioned the exposure in here is because I have to acknowledge the exposure when I diversify. And something is in addition. Remember that to take the position, you must have a certain level of margin, right? You must have the margin necessary to open the position available in your account. So when you diverse, and for instance, if I would use similar margin like presented in here in Nasdaq, and I would try to open 4 positions, okay, so 4 positions times 3.1K average on the margin is a no-go. Why is that a no-go? Because we've already understood that this is the necessary margin. And if I will try to use more margin that I don't have, I won't be able to execute the position. So this type of diversification is not suitable for my account. And to be able to perform this, I need a bigger balance and I need a bigger margin. Okay? Now, as you can see, the margin that is based here, that is presented here, is based on the leverage that presented here. So what's basically happening behind the scenes, what the platform does, is it divides the value by the leverage, and this is how we know the necessary amount. I can always go back alternatively to the instrument details, and the margin here, as you can see, is 5%, which what the platform calculates. And basically, if I'll go back to the order entry, and I will want to see the percentage by myself, I'll have to take 5% of that value from the position. So that means 62,300 times 5%. That's what's written here. Okay, I could as well divide the value by the leverage, which gives me the same result. Okay, and this is something to remember, because when we are diversifying, we need to know that we have the available margin to perform this. Okay, so we won't end up going through the strategy and maybe the last position, we're not going to have enough margin to do that, right? It's also very advisable to maintain a certain level of margin so you won't be pushed to the edge, and then if the market flinches against you, your strategy will not work as you expect. Okay, and I'm being gentle saying that. So the margin impact is something we have to pay attention to, and the margin in our account is also something we have to maintain a certain level. Otherwise, if we can't maintain the level necessary to hold a position, what will happen is the platform will close it. Okay, and that's definitely not part of the strategy we want. Yeah. All right. So, any questions anyone would like to share with me? Any questions about diversification or anything that I've explained about the question? Any questions, guys? This is your chance, and unfortunately, in 5 minutes we have to say goodbye. So I really have to carry on and do to send you the links. So if there are no questions, let's proceed with the okay, with the webinar. The question is, if I'll paste it like that, it's not necessarily going to look good. So let's do it this way. And we'll make this guy a bit smaller as well. And now it's, well, now it works. All right. So let me share with you the links here through the chat. This is for education. This is for logging and make deposit. This is for the help, back in the help center. And a real account if you're still playing with the demo and you want to start doing business. And that's for the academy. And now, as I said in the beginning of the webinar, I'm also going to show you an alternative way to get to the academy via the web trader. Okay. And now if I'll click here on the, as you can see, there is some kind of a YouTube or a play button, we can say that. And if I'll go to the academy, it will take me to the academy. And if I will go to the tutorials like that, in the middle of my screen, I have this nice additional screen with all kind of videos. I can scroll down like that. I can also scroll down with a wheel on my mouse, or I can hold the toggle here and just scroll it down to the subject that I want, and it will open just like that. We have all kind of content here for Forex and analysis. And honestly, guys, I recommend you guys to enjoy the content that we have in the website, because as I said before, there might be changes, and the access that you have to things now might change in the future. So really take advantage of everything you can from this interface before potentially we'll make a change. All right, guys, we have another 3 minutes before we say goodbye. So let me find it. The promotion that we have for the people join the webinar is to have a one-on-one premium market review. And to enjoy that promotion, all you have to do is just to copy and paste the Q&A benefit and give it to your senior account manager. So I'm going to paste that in the chat. Okay. And you can keep it and give it to your senior account manager after you've activated the account, and you will can receive one-on-one premium market review. Unfortunately, we have only 2 minutes before we say goodbye. So if anyone would like to share with me any questions or doubts about the webinar, now it's your chance. Thank you, Freddie. I'm happy that it was wonderful for you, and I hope that it was wonderful for everyone else. So guys, it's been a pleasure. As I said, it's time to say goodbye. I wish you all best of luck with trading. Have a fruitful week and have a good day.